All right, it is crystal ball time. Everyone wants to know, where is the Calgary real estate market going to be by December 2026? If you scroll through social media or read the news headlines, you'll hear two things. The bubble is about to burst, or Calgary is the last affordable safe haven in Canada. Today, we're going to cut through the noise. I'm going to tell you exactly what the experts are forecasting, but more importantly, we're going to name the specific factors, the X factors, that will actually determine where we end up at the end of this year. First, let's look at the data. The general consensus for 2026 isn't a crash, but it's definitely a shift. The Calgary Real Estate Board is calling for a market that is transitioning from a seller's advantage to a balanced and even a buyer's market condition in some segments. Here's a breakdown from what's being forecasted for price growth by the end of 2026. For detached homes, basically flat. We're looking at maybe a 0.1% increase. Semi-detached, holding steady, up slightly around 0.7%. Row homes and apartments, this is where we're going to see change. Forecast suggests a dip of roughly 2 to 3.5%. Overall, total residential prices are expected to ease slightly, down just under 1%. So if you're waiting for the prices to fall off a cliff to 2019 levels, it's likely not going to happen. Now, forecasts are just math based on today's data. To really position ourselves, we need to understand the factors that can change the game. There are so many moving parts in today's world, and especially this year. Here are the big three factors we're watching. Factor number one, the supply wave. We've had record housing starts recently. Right now, there are over 26,000 units under construction across the city. As those complete in 2026, we're going to see inventory rise, particularly in the condo and rental markets. More supply means more choice for buyers and more downward pressure on prices. Factor number two, the migration shift. For the last few years, our market was fueled by record migration, but the federal government has tightened the tap on temporary residents and international students. We've already seen international migration drop by over 80% in late 2025 compared to the year prior. In the previous years, we had huge demand from people coming to Calgary from Ontario and BC. With the real estate market softening in those markets, we saw a lot of demand from Ontario and BC. And with the softer real estate markets in both of those provinces, we're also seeing less migration from those provinces to Calgary, which means less demand for housing. Factor number three, the economic wildcards. This is the macro stuff. We have the renegotiation of the CUSMA trade agreement and potential US tariffs looming. That creates uncertainty for business investment. On the flip side, we have the memorandum of understanding between Ottawa and Alberta regarding pipelines that could spark investments in our energy sector. With all those factors in the blender, where do we end up at the end of December 2026? I agree with the sentiment that we're entering into a market, and that is actually a good thing. We're looking at a market of stability. We project that Calgary will remain an economic leader in Canada with growth around 2.6%. But the housing market will be defined by choice. For buyers, you have time. You can visit a property twice or three times, hopefully not that many from a seller standpoint. You can do your due diligence and you don't have to panic. For sellers, expectations are everything. We aren't selling to panic buyers anymore. If your home is average, it won't be chased. It needs to be priced for today's reality, not yesterday's memory. This is a very common occurrence for homeowners where they are stuck on last year's or the year before prices. The market has softened, the market is different, and you need precision positioning in today's market if you want to attract and stand out if your home is average. The bottom line, the market isn't busting. It's about taking a breath. There are headwinds, from interest rates staying flat to oil prices hovering around $65. But real estate is hyper-local. A detached home in the suburbs is operating a completely different economy than a downtown condo. If you want to know how these 2026 predictions impact your specific address and your specific goals, reach out to the team and let's build a strategy that works for this market. I'm Justin, and I'll see you in the next video.